Hello, everybody, and welcome to today's very exciting webinar on pricing strategies. And this was a very much requested topic for us. Today's hosts are going to be Andy Burden, Steve Budd, co-founders of Substribe. And before we roll into introductions and everything, a few quick housekeeping notices. If you can mute yourself while you're not speaking, that would be wonderful for quality of sound. If you have questions during the program, I think the way that Andy and Steve would prefer to do this is for questions at the end. Is that correct, Andy and Steve? And so you can type your questions into the comment box. I will read them out loud, or you can use the hand raise icon and we will call on you. And we had a few questions submitted ahead of time too, so we'll be sure that we get there as well. So as we roll in, Andy and Steve, why don't you kick us off and tell us a little bit about what Substribe does?
Sure. Well, let's start off just covering what today is about. So we've promised 3 steps to delivering a successful pricing strategy, and we're going to include a hard to find but vital ingredient for success as well. So Steve and I have worked in B2B media and information and data companies before launching Substribe. And at Substribe, we offer boutique advisory and peer networking for B2B subscription leaders. Now, that means that we've been fumbling around in the dark in the past, in our previous careers. We've walked a mile in your shoes as well. And we've really pushed ourselves to learn about pricing. So I'm hoping that by sharing what we've learned in the last 3 years, and which has proven to be a successful approach, that will almost demystify pricing and make it a bit more accessible. So our mission is to help B2B companies unlock the value of recurring revenues. And if you think through the journey along B2B subscription maturity, if you like, it's a bit of a slog to get from that germ of an idea all the way through to something that feels managed enough and optimized enough to really be producing predictable profits, but also customer lifetime value. And it's a real issue going from even opportunistic, which is, quite an acquisition-based strategy with quite often inconsistent customer experience, through to something that feels more defined. And that's a journey that Steve and we actually met at a place called Procurement Leaders, and we went across a couple of those transition points, and we asked ourselves, well, that was hard work, a lot of blood, sweat and tears. Is there a way that we could actually help B2B subscription companies do that with more ease in a shorter time frame? And so the 3 things that we've specialized in to unlock value at speed is customer discovery, which also includes a bit about aligning teams around the brand as well and around purpose. Product innovation, so we do some funky stuff with Google Ventures design sprints, which we love, and also go to market, which is things like helping marketing and sales teams, but also content and cross-functional teams to really land the value. And one thing that we do all the time is talk to our clients, end customers. So our clients are the following customers that you can see in the brands mentioned there. And we've worked with 29 brands across many of the markets around the world. They tend to have a global footprint. And we've helped with use cases like getting investment to launch new businesses. We've launched innovative new services. And we've also helped a couple of brands just unlock what they were sitting on, this lovely idea that they'd had that never had quite made it to market. And with one of the most extreme examples, our clients making money from an idea that had been blocked for 10 years, and they're now monetizing. So the common DNA is that our clients want higher value and enterprise subscriptions that stick. And we've gone through the highs and lows of trying to make that work at other B2B subscription companies. And we really enjoy it when we land it. And we land it by talking to our clients' customers. And these are just some of the hundreds of customers we've talked in depth with and discovered what value looks like to them. And talking with customers needn't be a daunting thing. We tend to hear stuff like, people are worried about fatigue and research fatigue and stuff. When we're talking with customers, we're independent, we're agnostic, and we bring energy to the conversation. So quite often people ask for transcripts of those discussions. Anyway, let's kick off. So we're going to cover the 3 steps to delivering a successful pricing strategy. But first, before we get there, we'll share some important pricing insights to give you context. So arguably, a 1% price increase equals 10% increase in profits. Some people are saying 8.6%, but the point is, it makes a big difference. And when you get those profits, you can invest them back into the growth of your company. So that's back into sales, back into marketing, back into product, and that benefits the business, the internal teams, and customers. And the growth drivers, according to Profitwell in a recent session with them, and in terms of budget spend on growth drivers, it's still very weighted towards acquisition. Retention is getting a bit more attention now, which is nearly about 10% of the spend. But monetization is really underrepresented. Sorry, and there's if you think the pricing strategy is part of monetization and that's being underused, let's really start using that as a lever for growth. If I go on to the next slide, which is just thinking about why isn't pricing prioritized? It should be on the high to-do list for a company. It should be revisited often, but it's not. And I think this is why. So Steve and I have thought about this. So we've been there. Management teams putting their fingers in the air, sharing heated opinions, coming out none the wiser. Teams having to make sense of it in the moment when they're negotiating with customers. And then, an expectation that people do the right thing. And then you start talking about rules of engagement and governance and stuff. It's a bit messy and it's hard because it's not looked at. It feels a bit like a dark art. It doesn't tend to connect to roadmaps that lead into the future. The chosen few tend to be in charge, and it can feel like it's either coming from an ivory tower or produced by a bean counter. It's very easy to sneer at. And it's the hot potato that's thrown around. So you can see content teams seeing it as a sales thing. Sales see it as a finance thing. And it carries on like this. But getting it wrong holds back the entire company. So there are some bigger reasons why things need to change, particularly when you think about subscriptions. So the powerful dynamics at play that will limit the exciting growth that you could be having is really important things like the cost of acquiring customers is increasing. So it's taking longer and it's definitely harder, and data's backing this up. Quite often discounts are used to drive urgency, and discounts drive churn. So you're losing more of the customers that you've spent all that time getting, and that lowers lifetime value. And if you put those things together, cost of acquiring customers, discounts, churn, you're taking longer to get your payback time. So for all those reasons, we think it's best to make more of the customers you currently have. So without further ado, here are the 3 steps to delivering a pricing strategy. Now, in the time we have today, we're not going to be able to give you the whole playbook, but we're sharing practical examples to inspire you and give you a good place to get started with your teams. So what is a pricing strategy? It's a strategy that empowers growth by harnessing the right attributes or features at the right price points for the right customers. So I've done a whole bunch of talking, and I'm going to pass across to Steve to unpack this for us.
Thanks, Andy. Yeah, so 3 steps. You'll find that we're talking a lot about data here, so it's all quite quantitative. But I suppose the secret ingredient for us also is that we get context from the interviews, the in-depth interviews that we have here. So bringing that data with the context is really, really powerful. So let's look at that step 1, packaging, featuring the right attributes in your plans. What's the key part of a pricing strategy? So one of the exercises we run with the teams is getting to agree on the most important customer personas, which is really important. Often, as I'm sure you're aware, you all have different opinions about who your key customers are. So to align the attributes of your service to your customers, you have to get to know what's going on in your customers' world, their priorities, key challenges, frustrations, but ultimately to think from the outcomes the customers are trying to achieve, and then work back to your service. What will truly help them? There's a lot of things we do, but this helps narrow in on what's important. And once we've narrowed in on that persona, we research the customers and ask them to trade off the attributes of the service. So what one thing they most value, or one thing that they least value. Ultimately, this helps you put the right attributes in front of the personas, but also at the business level to consider the products you should be investing in or not, as the case may be. This is a bespoke for each client we work with, so it will be different for your business in this example here. So in the chart, you can see two colors representing two personas, a senior persona in green and a more junior associate persona in blue. The vertical scale shows the preference attributes, above 0 showing increasing value, and below shows decreasing value. I will clear the results in the dotted pink boxes from left to right. So box 1, you can see that both personas have a preference for insights and case studies. Box 2, you can see associates don't value opinions whatsoever, and there's hardly a reading for executives. And box 3, the personas differ on guide 2s, reflecting their relative experience. Your teams need to know what is most value and why, so that you can put the right attributes into your plans for your personas. And in this example, you can have a core offering of insights and case studies, and perhaps a differentiated service for associates and executives, i.e. associates need more guided support. It's also giving you other attributes that need to come under review. Step 2. So we look again at some more data, and that's finding the right price points for your customers. So another chart here. So we ask the customers to provide pricing information on their selected attributes that we've just gone through in the last exercise, asking questions such as what's too cheap, what's too expensive, etc. And this is one of the most valuable outputs. We really do love this chart. Wish we had it when we were on the other side of the fence. It gives us a prediction of what would happen at a given price point. And again, this is bespoke for each client, so don't reference this for your own business. But this chart is something we use to show what happens to market share when prices increase. It gives teams decisions based on data, not opinions, which is obviously important. The black line you see here shows the market share dropping as the price increases in 5K increments from 5K to 50K. And it's based on and forecasting for 100 companies. So the 10K price point, I just click here, shows a 60% market share, and therefore recurring revenues, it's predicting recurring revenues of 600K. However, if we were to look at the 20K price point, although you're sacrificing market share, your revenue could potentially double to 1 million. And then again, if you look at where you potentially could maximize your revenue, you would be dropping down to 30% market share at a 45K price point. But why it's so important to talk to customers to get that context, because in those conversations, it revealed a hidden risk. In this case, there is a hard to shift incumbent and the market share is reduced to a third. So it's too risky for a new market entrant in this case. So on to that last step, positioning, attracting the right customers so they stay. Again, another way for us to interpret some data, and I'm going to hand back to Andy now.
Yeah, thanks, Steve. So by the time you've combined things like speaking with the customers, the trade-offs that Steve showed earlier, and the pricing sensitivities, you can build out a quantified buyer persona. And everyone tends to be using marketing personas these days. We had access to some in previous careers, but we don't think they go far enough. And it's important to figure out which personas are going to give you the best recurring revenues to optimize for customer lifetime value. So let's share a few of the personas we found out. So we gave them some memorable names. Persona A, Big Wig Bob. Persona B, Go Getter Jill. Persona C, Learner Len, and Persona D, Niche Nelly. Now this was for an expert network, which we found out that 2 of the personas would only have a willingness to pay, WTP, of hundreds of dollars. And a couple of the others had willingness to pay of tens of thousands. So those are the ones that we're going to hone in on. And so if you look at Learner Len, he wants advisory. He doesn't want networking events. although he's willing to pay tens of thousands of dollars, actually in the interviews, it became obvious that he didn't have enough internal influence. He'd have to go off and find sponsors to sign off for this service. The cost of acquiring a customer is high. The lifetime value, because he's going to face a yearly battle to get renewal, is potentially low. And actually, really importantly, for the benefit of a networking community, he would drain. He's not able to exchange value back into the peer networking. Whereas go-getter Jill had her own ability to sign off. The cost of acquiring customers was medium, still not insignificant, but the lifetime value would be high if we were able to get the client to engage with her team and go into power user kind of setup for an enterprise subscription. And overall, the network impact would be that she would help grow it because she would reciprocate that value. So I also mentioned that I'd detail the missing ingredient. It's quite simple, really. But firstly, this is how we get to it. So the missing ingredient is confidence. And we've been there with teams. If you do pricing to teams, then it's really tough for them to kind of sink in with it and understand it and present it to the clients. So we get team context by working with teams in workshops. We then go off and speak with customers in depth and play that back to those teams with our view on what they could be doing better in order to find shortcuts to success. Because we're not pretending that we've done everything right in the past, so we can also share stuff that we definitely wouldn't do again. And does this produce results? Of course, I'm going to say yes, but I'll back it up with someone else's words. A client of ours, Ellen, held her nerve because we'd worked with her teams and worked closely with her target audience. She knew that her strategy was connected to customer outcomes and that her team understood the journey ahead. So when they moved from individual kind of low value licenses to a corporate license model, they've had little resistance to substantial price increases. The sales targets pre-COVID have been met, and they've been able to shift subscription revenues to nearly a third of the brand portfolio. So that puts them in a better position. And as Ellen says, the renewals are holding up well. They haven't lost a single core member. So it felt really scary thing to do when we first met her. And she just feels very confident about that now. So in summary, we think that it's worthwhile aligning your teams. It's worthwhile truly getting to know your customers. And often, look, we'll say it, it's hard to do that if you've got an agenda like earning commission or defending your P&L or whatever. It's worthwhile getting a third party in. Learn from data, not opinions. Everybody's got heated opinions and it just gets in the way. It's part of the reason why it takes so long to get through those transitions. But also review pricing regularly. You know, there's an argument to have a look at this every quarter, or at least build up the data around the quantified buyer personas that you have, and work on building the confidence with the teams and ultimately actually with customers. If you've got a really structured approach with customers, they engage well with that. I think that's giving us 10 minutes for Q&A. So hopefully that wasn't too fast. I did have a double espresso before we started.
Well, so just a reminder, and we'll go, if you have a question, either type it in the comment box or use the hand raise icon or wave wildly and I'll try to call on you. We did have a question while we kind of bring people into the queue, a question that was submitted ahead of time, and it was a very good one. Is there a particular time of year where price increases are better than other times of years?
I think it would depends so markedly on the market that you're in and what's happening in that market. I think going back to our previous comment, it's worthwhile looking at this if you can quarterly, and to really get a finger on the pulse of your customers. Of course you can track what your competition is doing. Of course you can track other things, but actually being able to find out from your customers what's going on in their world will feed into a more differentiated value proposition for your own business.
Excellent. I see David Foster raising his hand. David.
Thanks, Elizabeth. To your, I guess what I call attrition chart or your forecast of market share, how, I mean, obviously that's something of a puzzle, and it's based on strategic assumptions. For instance, if you're, you know, if it's important to you to garner more customers because you've got a lot of upsell possibilities down the line, that's going to affect. But how, can you talk a little bit about the science of that? Because I certainly have charts like that, but they've entirely come out of my head. They don't have any science whatsoever. So
yeah, I'll let Steve answer this because he's
yeah,
well, it's his background, but you know, we've definitely been part of that strategic thing of seeing someone look at that kind of chart, or even if it's in their own mind, and going, I know what, we're going to go for the high volume, and we're also going to go for the high value. So it's a really useful tool to work out what you're going to do. Steve, over to you.
Yeah, so it's we use the Van Westendorp technique actually to help us get to this point. It's not I'll be happily offline to guide you through it, the process. You know, there are a couple of graphs, the charts that are fed into this, which are also really useful to know where your pricing elasticity is, and more data on willingness to pay. As we said, it's just this one that just gets down to business really. But it's, I mean, it's open source science, if you like. So it's not like any IP of ours to arrive at this. It's just how we interpret it and help our clients to use it.
I'd say the only thing that is different is we created that chart to hide all the kind of almost like the mad lines and charts and graphs and stuff, and actually just cut down to what would we have wanted to see that didn't make our minds kind of implode.
Thank you. Very good question on the chat. Can you discuss any success migrating single subscription publishers, so say average sales less than $1,000, to this model of yours? Do they maintain a hybrid, so a single sale and a site license approach?
Yeah, well, we can share experiences for sure. The case study I mentioned before with Ellen at Utility Week was just that migration, actually, from a few £100 annual subscription to well over £10,000, sometimes over £20,000. And we guided that team through the value proposition, but part of the essence of that is to be able to work through what you're going to say and what your team's going to say to the personas. So cut out all of the stuff that they don't value and target in and say, we're going to do X for you because they're persona A. Whereas you might have you will have a very different conversation with persona B within the team. So for that instance, it would be, let's talk deep strategy with the strategy and regulatory team, versus let's talk forecasting with another persona. So you want to build up almost like a dashboard view of the right conversations to be having at the right time if you're moving into that corporate subscription. Where I mentioned having an experience of kind of managing both, actually, was a company Steve and I used to work at, where we didn't want to cut off the long tail. It was worth too much money, even though the renewal rates were not that great. So, you know, year after year, it was getting harder and harder, but it just felt like it was too much to cut off. But actually, in the end, the lesson to be learned there was that the smaller single subscriptions were getting in the way of the bigger value, and we're talking about kind of £30,000-40,000 a year value. So people were saying, aren't you just the network and magazine guys that just do stuff for £1,000? We go, no, actually, we're going to help transform your industry. But it just really mushed things up. So although it was, you know, arguably £500,000 of recurring revenue, it had a massive hole in the bucket, and it was getting in the way of the transformation that we were undergoing. So at some point, it's going to be worthwhile taking that jump, and that's what Utility did.
It circles back to the chart, doesn't it? I mean, that's why we wanted that chart a number of years before, trying to juggle those two things. But eventually, obviously, procurement leaders went with a higher value option and have done well from that.
I think I see that's a great answer, and it's certainly a scary transition, but an important one. Julian, did I see you raise your hand, or were you just saying hi?
I was probably just scratching my head. No, I did raise my hand. I got a question about let's say you've gone through a migration towards your corporate membership. You didn't quite have the courage to go for pricing in the way that you might have done, and then you look back on it and you think, you know what, we're still underpriced. You know, we didn't get that right. Have you seen examples where people have then been able to go up the pricing curve without fundamentally changing the offering? Because the temptation is you get into the product development cycle where you think, okay, so to get more, you know, to increase the yield, I've got to invest even more in product development. All right, I've got to build even deeper relations with my customers. It's a bit of a trap. So,
completely.
You got any thoughts there?
Yeah, I mean, the trap in the end tends to be, if we're putting the price up, we feel like we need to produce more stuff. And then over time, you don't want to let go of any stuff because you want the price to be going upwards. And by the time we talk to people's customers, they have no idea, you know, what I'm looking at anymore. So that's definitely one of the traps. And I think it's really, really important to make sure you're not leaving money on the table early doors, because, and I'm not going to name them, but I had a conversation with someone who said, you know, I wish that we'd just gone bolder sooner, because if you set the stall too low, it is just very difficult. You know, one of the other brands that we were talking to had started freemium, and when we talked to their end customers, they were saying how vital and critical that this free thing was, and they couldn't believe it was free. But by the time the willingness to pay stuff came up, it was very low because it was off a bench of zero. That said, you know, it does make sense to be going through that journey of acquiring, then monetizing, then retaining. So, you know, it does depend on where you are in your journey. But frustratingly, Julian, the other bad bit about it as well is the data is showing that in the UK particularly, we're really bad at asking for more money. So we tend to undervalue from the start. And in the US, not quite so. So there's some cultural stuff as well. But it is well worth doing this pricing stuff before you even launch. So I mentioned one of the use cases for us was helping a team get investment. And we were talking hypothetically with their target market in Australia and Singapore about pricing, and also their ability to get sign off and all the other things that will get in the way. And we're able to then find the right kind of level for them to start off with. You know, if you're in that position, that's the best way to go.
Yeah, and being confident, it goes back to the attributes, you know, getting that cut through on what's most valuable features, and then understanding the value from a willingness to pay perspective can give you that confidence to push the price point. And just seeing Ed's comment in the chat there is that, you know, just that, you know, going from 10 to 17.5 in such a short space of time with that confidence.
Great. Now I'm trying to be mindful of our speakers' time and everybody's time. This program was only a half hour. I'm sure we could go on forever. So thank you to our speakers. For everybody else, and you want to continue this conversation, head over to our Slack channel. If you're not registered there, go over to renewed.net and all the information you need is there. Thank you everybody for the lively discussion, and we hope to see you all on our next program or over on Slack soon. Andy and Steve, excellent job and thank you.